everyone. So first and foremost, thank you everyone for joining the event. So we are very glad to have several distinguished guests today. So the theme for today is actually DeFi. So like we know that lots of people are talking about DeFi, and there's a huge craze going on with DeFi at the moment, and so many people are participating on DeFi, but yet the question is, what really is DeFi, and how is it changing the crypto and blockchain landscape, as well as how is it affecting the regular user, on the ground, regular user that is interested in blockchain, how is it affecting? So today we have two speakers joining us. Unfortunately, one of the speakers couldn't join us. So first and foremost is Paul Murphy. So Paul is from Credmark. Hello, Paul.
Hello, it's a pleasure to see everybody today.
Hello. Hi. All right, so the next one is actually Sabrina Adani from Rupiah Token.
Hi, everyone. Thank you for inviting Rupiah Token. Pleasure being here.
Hi. Hi. All right. So let me just give a brief introduction about Paul and also Sabrina. And I'll also mention a little bit about Aave token. So first and foremost, Paul is actually a software career, has primarily focused on financial services and voice. And actually on Wall Street, he has worked on a broad range of front and back office system. He then became obsessed with the human voice as interface, speech recognition, NLP. And with Credmark, Paul has re-entered the financial space because he firmly believes that crypto is the foundation of the next global financial system. So Paul will today share with us what Credmark is and some of the exciting stuff that Credmark is doing. So next is Sabrina. So Sabrina Adani. So Sabrina has a great passion in the blockchain area, as she believes this technology will help boost a more inclusive financial system, which is very important in Southeast Asia and in Indonesia. And prior to joining Rupiah Token, Sabrina worked as at Development Bank of Singapore, DBS, as a credit risk and policy officer. And at Rupiah Token, she manages the entire pipeline of growth, partnership opportunities, and support the team's development strategies, right? So Stani Kulechov, unfortunately couldn't be with us today. So I'll just briefly share with you what Aave does. And also, I think some of the participants might also have questions about Aave, and we can see how we can discuss about it also through Sabrina and Paul. So
hey Zach, it looks like Mark Zeller from Aave has joined us, so he may be able to answer questions about Aave.
Yeah, I will be more than happy to. Sorry for Stani.
Welcome, Mark. Why don't you give a brief introduction about yourself and also Aave?
Sure. So I'm Mark Zeller. I'm the integration lead of Aave. My job is to make third-party developer building on Aave life easier. And Aave is a decentralized lending protocol, a money market protocol based on the Ethereum blockchain. We allow people and anybody in a permissionless way to deposit some asset in order to collect some passive income as lenders, and anybody trustlessly to borrow some assets as well on the other side and pay interest rate to the lenders without taking any commission in between. That allows and are part of what we call the Decentralized Finance movement, or DeFi. And we started this year in January 2020, the Aave protocol, which is the current form of Aave. And we started actually in 2017 under the name ETHLend, Ethereum Lending. And we are so far, I think, the biggest DeFi protocol out there. And we contributed in innovating in the DeFi space with new features such as flash loans. Maybe we will have time to talk about it. Credit delegation, stable rate for borrowings, all this kind of cool stuff. And that's it.
All right, thank you, Mark. So I think we will be dividing this session into two sessions. So one, we will share a video presentation on each of your project, and then we will dive in right away and discuss about DeFi. So shall we let the organizers start and share some of the videos of the three companies?
Hi, I'm David Truong, a builder and developer at the Aave protocol. So I'll quickly go over what's Aave and how we fit into the DeFi space. So Aave is a money market lending protocol. On one side, we have depositors, and they interact directly with the protocol by depositing assets, and they earn interest immediately in the form of A tokens. On the other side, we have borrowers, and borrowers at any time, they can request a loan if they've put up collateral, and they can request it in either a stable or variable interest rate, and they can repay back these loans whenever they want as well. So currently, the Aave protocol, we have more than $1.5 billion of assets locked in the protocol. We've seen huge growth, especially over the last few months, and we just launched at the start of this year. So the main features of the protocol is, as I mentioned, you can deposit and earn interest. When you deposit, you get these A tokens, so you can see your interest increasing in real time. Then there's also interest redirection feature as well. On the borrow side, as I mentioned, you can switch between stable and variable interest rates. Then also we have credit delegation and flash loan features, which are more advanced features. We currently have more than 20 assets listed on the protocol. And also have multiple markets, which includes the Uniswap market and soon to be set protocol market. So in the future of DeFi, we've seen incredible growth over the last few months, nearly $10 billion total value locked in DeFi. And where we see the future heading is more users, more choice, and much more value being locked in DeFi. As an example of this, DeFi Saver for a combo. So DeFi Saver allows users to switch between different lending protocols based on the best interest rate, and they make this really easy. And this is quite powerful because it creates safer loan products and more choice for users, and makes it a lot easier to use these DeFi apps. And for a combo, if they're taking things like the advanced flash loan feature and making it really easily accessible to non-technical users, where they can essentially connect Lego bricks together to execute a flash loan. So this is the power of composability, and it will bring in more users and more use cases. Some more examples is Yearn Finance. They are a yield aggregator across many different earning and lending platforms, and they essentially optimize the yield of a user. So that will encourage more money to come into the system. Then also Aave, which is a game with an NFT, and underlying the NFT are A tokens, interest-bearing A tokens. And that's really special because that will bring in the non-financial use cases and people that just want to play a really fun game, but at the same time they'll be earning money, and underlying it will be the DeFi ecosystem. And for the future of Aave specifically, we announced recently a version 2. We call it Seamless Finance. There's a whole bunch of features that will really expand the horizon of Aave and allow us to reach the next level. We have a detailed Twitter thread and also a post on Medium that you can have a look at in these links here. And yeah, I encourage you to join our Discord, have a look at our documentation, and hope to see you around. Thanks for listening.
Hello everyone, we are from Rupiah Token, and we'd like to share a little bit about Rupiah Token and DeFi and blockchain ecosystem. First of all, we have heard DeFi term quite often recently, but what is DeFi? DeFi is a set of financial applications and products built on top of blockchain that benefits from the decentralized network, which are trustless, transparent, and without any intermediaries. There are some of the most common types of DeFi projects in the market, such as lending and borrowing, derivatives, decentralized exchanges, stablecoin, KYC and identity, and prediction market. While DeFi market is still in its early stage at the moment, we can identify some of its pros and cons. Some of the pros include a more accessible financial products to anyone in the world, providing an open source and transparent ecosystem, which is powered by smart contracts and large opportunities to offer different financial products. On the con side, the DeFi ecosystem, which mainly resides on top of Ethereum network, is much slower than the traditional and centralized financial market one. There are large potential of flaws and technical issues as well, since the product is complex and it limits the scalability. So as we have mentioned before, one of the important aspects in DeFi ecosystem is stablecoin. There are plenty of notable stablecoin in the world such as USDT, USDC, Paxos, DAI, and so forth. In Indonesia, we have Rupiah Token, which is a fiat-backed stablecoin. In a nutshell, Rupiah Token is the rupiah fiat put on top of blockchain for the purpose of crypto asset trading. For one fiat rupiah, user get one Rupiah token in return. So now, let's see some of the examples on how user can use IDRT in DeFi ecosystem. First of all, user needs to convert the rupiah fiat using Rupiah Token platform and select IDRT on ERC20 blockchain. Then user can simply input the amount of IDRT to be deposited and input the destination wallet address. In this case, we will use MetaMask wallet attached on the internet browser and simply copy and paste the wallet address shown. Once purchase request is created, user will be asked to send the rupiah fiat to Rupiah Token's bank account, and in return, Rupiah Token will immediately send the IDRT to the user. Once user gets the IDRT, they can simply visit Uniswap, which essentially is a decentralized exchange to convert the IDRT to any other ERC20 token desired. In this case, we will swap the IDRT to SUSD or synthetic USD in order to enable us to access one of the DeFi platform available called synthetics.exchange. Then user can just visit synthetics.exchange and connect their MetaMask browser wallet to Synthetics platform.
Hi, I'm Paul Murphy. I'm the CEO of Credmark. At Credmark, we are developing crypto-native credit data. What that means is that we find credit events in the activity associated with DeFi lending protocols as well as CeFi lending activity. And we use that data to produce credit scores for blockchain addresses. Now, we're doing this in order to enable what we believe will be the next generation of DeFi lending products or protocols, as well as CeFi lending products. We of course look at every DeFi protocol that's out there, including the ones that Aave have developed. We're very, very excited by what's going on in the lending space right now, and we're seeing a lot of innovation, especially in DeFi. And so some of the most interesting work is coming out of my co-panelist Stani. But we know that a healthy financial services infrastructure requires credit. And so credit is in our future. We're developing it in a way that is crypto friendly, i.e. that's associated with addresses, not identities. And that's something I'm happy to talk about a bit more. We're really looking forward to this future that all of us are building with great excitement at this point.
Thank you. Thank you, Paul, Mark, and Sabrina. So, all right. So, let me just give a brief introduction about myself as well. So I'm Zach Shah, co-founder and CEO of PundiX. So what we do is that we are a blockchain company and we focus on hardware and also software solution. So, all right, so let's kick off by having some discussion. So first, I'd like to forward the first question to Paul, actually. So I know that one very exciting thing that Credmark does is that you guys have a credit score system. And in fact, you guys did a credit report recently. So why don't you give us a little bit of insight on what the credit score is? What are like the variables, the key points that you guys take into account? Yeah.
Sure. So we model our credit work on traditional credit systems. So we know exactly how FICO, for example, in the United States produces a credit score. They ingest credit events from lenders, and then they score those events and then weight them in order to produce a credit score. We have done our best to find the equivalents to every one of the factors, the traditional factors, in crypto. In some cases they exist, in some cases they don't exist. And we are now about to start going beyond what is traditionally done in the credit reporting world by taking into account signals that actually don't exist in traditional finance. And that very specifically, we are looking at Aave's credit delegation because we believe that's actually a positive signal. In other words, if somebody is willing to lend you their collateral, right, that means they trust you, right? And so we are looking at adding that to our score. And this is really the first time that we're able to move beyond what is a system and a computation that's been in existence for about 100 years. So we're paying attention to everything that's going on in DeFi as well as CeFi, and all of that data, everything we can collect, goes into what we use to produce these credit scores for blockchain addresses.
Right. So as you say, traditionally, agencies like FICO would actually do credit rating based on an individual. And what
correct
the new trend, what Credmark does is that you actually relate the addresses into a trust score. Is that what is? Am I understanding it correctly?
Yeah, so we do it at the address level, because by doing it at individuals, that would imply that would have to KYC everyone, would have to know everyone's identity. And the problem is that identity is bestowed by governments, right? So if we did it in the United States, would have to understand the United States identity system. If we did it in Indonesia, would have to understand the Indonesian identity system, et cetera. And everybody does it differently. There's no such thing as a global identity, but crypto is global. So we absolutely need to we need to provide a service that will work across the planet. And in order to do that, we associate these scores with addresses, and then which works for DeFi protocols, because DeFi protocols may not know the identity of the participants, but it also works for CeFi, because CeFi, that is centralized lenders, they'll know the relationship between addresses and their customers who are KYC'd in whatever jurisdiction they operate in. So we're solving the problem in a crypto-friendly way that will also work in a relatively traditional sense.
Right. So you are actually solving not just the centralized exchange requirement, but also the DeFi, DEX requirement. So I'd like to move. Right. So I'd like to move the second question, second focus to Sabrina. So a Rupiah token is a very central project to Indonesia, and you guys are also have been listed on many centralized exchanges. So with this DeFi movement happening, how does it change Rupiah tokens strategy moving forward? Are you guys slightly moving towards decentralized exchange, or how are things moving along for Rupiah token?
All right. Thank you, Zach, for the question. So yes, you're right. So the DeFi boom actually, and its popularity not only happening in the global crypto and blockchain ecosystem, but also in the Indonesian ecosystem, as well as our community itself. As for now, Rupiah token is not yet on lending or borrowing platform of DeFi like Aave or Compound, for example, but we are actually already tapping into the decentralized exchanges, whether it's the one with the order book or the one with the instant swap exchange like Uniswap. So with this first step that we are trying to tap into, we're trying to give access for Indonesian users to simply convert their fiat, use this stable coin to access the global liquidity pool and also DeFi ecosystem itself. So other than that, other than trying to grow our ecosystem into the DeFi platforms itself, we are also trying to be as blockchain agnostic as possible. Because as for now, we know that the DeFi platform itself resides mainly on top of Ethereum blockchain, in which Rupiah Token also based. We are mainly on the Ethereum blockchain, but we are also on the Binance chain and also Luniverse chain. But other than that, we are trying to see what kind of other blockchain network that is going to become the next platform for DeFi. So we're trying to be as blockchain agnostic as possible, because as we see, even though there are a lot of projects developing on top of Ethereum, but there are some flaws as well. For example, like the congestion and also high gas fees. So it might not be the best way yet, but in the future, I believe we're going to see a lot of cross-chain bridge and also the development that allow the blockchain agnostic type of DeFi ecosystem itself.
Right. All right. So Sabrina, you mentioned something about supporting cross-chain and maybe even cross-protocol initiative. And I know that recently Rupiah Token also announced a partnership with Harmony Protocol. So is that something that that what you're talking about, like moving into cross-chain nature, and how does that changes the dynamics of you guys on the Ethereum network?
Okay, so basically, yeah, you're right. We're just recently announced partnership with Harmony. So what we are trying to do right now between our engineers is that they're trying to build the cross-chain connection between the Ethereum chain and Harmony chain itself, so that the one that is going to operate later on the Harmony protocol itself will mimic and be connected to the one that we have on top of the Ethereum chain itself. So other than that, we'll also see that even though there are going to be plenty of blockchain network later on, which can support DeFi as well, we see that Ethereum has been the leading one that is becoming the initiator of the DeFi ecosystem itself. So we see probably it's going to be more scalable, especially with the upgrade to Ethereum 2.0 later on. So even though we're gonna have the Harmony blockchain, and also still we're maintaining the Ethereum blockchain, I believe it's going to kind of like cater both projects in the both ecosystem, both in the Harmony and also in the Ethereum chain. So hopefully with the upgrade in the Ethereum 2.0 as well, there will be more projects, and also it can support more users out there with better transaction fee, for example.
All right, thank you, Sabrina. So next, Mark, we know that these days it's been a very busy time for Aave. There's a huge boom, and you guys are really in the middle of it, in the center of it. So can you just tell us why did you guys move from ETH lending in terms of branding or maybe even strategy and product wise to Aave? Was there any like significant fundamental shift, or was it mainly a branding shift? Yeah.
I think it's the embracing the composability and the concept of money Legos. So basically, ETHLend, when the project was launched in 2017, you don't have any stable coins around. So basically, the DAI doesn't exist. MakerDAO exists, but what will be called later the SAI was not available yet. You don't have Compound with the decentralized lending pool model. We were aware of the decentralized lending pool model, but you don't have enough liquidity to justify that model. So basically, the only thing you can build at the time is a peer-to-peer lending protocol. And that's basically what we built in 2017-19 with the ETHLend protocol. And as DeFi grew, and that's the important part about DeFi and Ethereum, is that each protocol builds a part that contribute to the other part of the protocol. So basically, when we say that Aave is the biggest DeFi protocol, that's true in terms of number, and everything is auditable. If you check the smart contract, the money is there, but we will be maybe 10% of what we are right now without Finance, without Curve, without MakerDAO, even without Compound and all the other guys, because we all focus on something that we do and we try to be the best of the world, each of us to be in the part that we are building. And we basically build bridges and find synergy with other projects that allow us to be much stronger together. And that's the important part and why Ethereum has so much traction so far. And that explain this growth. And the new model with Aave launched this year is fully embracing the possibility to have synergy. So by being a decentralized lending pool protocol, which is completely open source, which is completely permissionless, and anybody can build on top of that, we allowed this new growth, I think. So it's much more than just a change of name. I think it's embracing the fact that we are stronger together in this ecosystem.
Right. So as far as I understand, moving from a pure ETH to a different asset class, different digital asset, and also leveraging on the multiplier effect, you know, like all the different DeFi tokens.
Exactly. And basically, I want to react to the very good intervention of my co-panelist. So basically, a credit delegation is much stronger and decentralized if you have a good trust score or credit system. So basically, what is happening right now is credit delegation is that it's actors, entities that know each other and go into a legally binding agreement with open law together. But it's more a B2B system than open, decentralized, open to everyone system. And if you want to scale a credit delegation system, you need to be able to trustlessly and more seamlessly delegate your line of credit to third parties. And in order to scale, if you have a trust score, it's much easier. It's just much easier to do than just writing maybe on a forum, hey, I have some borrowing power, are you interested into it? And if you do that, you go back into the Headland system in 2017 and you are a peer-to-peer lending protocol. And that doesn't scale as much than a lending pool protocol. So it's super important, and we can wait to find synergy together. And also, in the terms of having focus on every chain, I think it's important, but we had this kind of discussion in 2016, 2017, where it was like the time of permissioned blockchain, like Hyperledger or all this kind of stuff, or private blockchain like Quorum and JP Morgan did at some point. No, in 2020, nobody serious work on something that is not a public blockchain, a public permissionless blockchain. And I think the question in 2020 and 2021 is not to be completely blockchain agnostic to work on every chain, but more to be layer agnostic. So you got the layer Ethereum layer 1, which is the settlement layer, and maybe the transaction fee there will be expensive, but you will have many scalability solution or cross-chain solution with specific blockchain that are made to find the synergy with the other project. And basically, if you have presence in most of the scalability solution, you can allow more composability, more traction, more synergy within the ecosystem.
All right. Actually, Paul mentioned something pretty interesting. So the credit rating of different Ethereum addresses. So is that something that Aave is working on? You know, like, hey, I'm going to lend you, I'm not going to lend you, or you need to collateralize higher if it's a untrusted address. Is that in the works, and how challenging is that? I would imagine it's not easy to do it.
It's extremely challenging. We are still on that part at the research phase. So it's not something that can happen overnight, because obviously when you do over-collateralized loan, which is the basis of all DeFi right now, the risk is very low, because at the end of the day, as you can incentivize someone anywhere in the world to pay the debt on behalf of the borrower because they take the liquidation bonus, it's kind of easy to scale and very resilient. But when you enter the territory of under-collateralized loans or no collateralized loans, who's going to pay the debt on behalf of the borrowers, because there's no direct financial incentive to do so. So obviously, it's something that you need to be 10 times or 100 times more careful that when you do over-collateralized loans, and we are already quite careful with over-collateralized loans. So it's not something that can happen overnight. We are very actively researching, and that's not something you can build alone. And that's why I always emphasize on synergy, because I think it's something that we will build as an ecosystem together. It's in 2020, DeFi doesn't make sense if you work as a silo. You are stronger by focusing on something you are the best in the world on, and everything else you work with other actors and you find synergy with other actors.
Okay, so Mark, you mentioned something interesting, not building silos. So I think the next question is for Paul. How does different credit score, credit rating agencies such as Credmark build the database? Are you guys pulling the database together? Is there a common database as we speak, or it is still early days?
There is a common database. Unfortunately, it's only common to us. We would love to make some of this stuff public, but first of all, as Mark said, it's very early days. We don't know how yet. Our focus right now is on making sure things work and making sure that our piece of the puzzle is useful to other people. We pull our data from public sources. Of course, all of the DeFi projects. We also allow people to self-report data and give us delegated access to their CeFi accounts. And then our customers also give us data. So it's a mixture of proprietary data and public data. And of course, we've done a lot of work to interpret all of this data and make it coherent within the context of our system. Of course, in a perfect future DeFi world, all of this will be on chain. We'll have some sort of zero knowledge proofs so that we can respect anonymity or pseudonymity as much as possible. But we made a very conscious decision early on to get to something useful faster than to get to something perfect.
It's very interesting because in this region, Southeast Asia, I think in fact, many global companies are actually applying for a Payment Services Act in Singapore. So one of the thing that MAS, which is the Central Bank of Singapore, is actually looking at is how to track addresses. Should we give credit score to addresses? I think this is one of the biggest challenge, if not the biggest for regulators. Yeah. So
it is. We're based in Singapore. I live in Bangkok, so we're very aware of what's going on in that region. And yes, we think that a lot of innovation is going to come out of Southeast Asia, obviously.
Agree. All right, Sabrina. So Rupiah Token is a company that PundiX work very closely with. We have signed partnership. We have supplied Expose, our point of sale system, to Rupiah Token, and also you guys have bought an XPass card from us, which is a blockchain card. So my question for you is that how do you see the Rupiah Token usage, the IDRT, your stablecoin, being used in Indonesia, especially on small and medium enterprise company? What are the uptake and adoption that you guys are seeing?
Okay, thank you, Zach. So for now, and initially, Rupiah Token was built to cater Indonesian traders and blockchain adopters in order for them to easily access global exchanges and global liquidity, such as in the DeFi platforms itself. But in the future, as a stablecoin, there are actually lots of use cases that potentially we can adopt as well. But we need to build a strong ecosystem in it, so we cannot work alone. So we need to go hand in hand with the startup, for example, with the SME and also export and import businesses. So what you're saying is interesting, actually. The small and medium enterprises, we see there are a lot of companies doing business in export and import Indonesia, and even individuals having their needs to remit money, send it abroad, or receive money from another country. But it's been quite a challenge currently with the traditional ecosystem, because the fee is quite high, and also the settlement time is quite long, could take a couple of days. So this is actually something that we can tap into, the cross-border transactions, remittance, and so forth. But in order to be able to do so, we have to work together with the relevant parties, as well as simplify the user journeys for them in terms of the blockchain and crypto itself. Because right now, for example, if I'm sending you some USDT to Singapore, and then you are going to withdraw it to SGD, it's gonna take quite a long process until you can actually receive the SGD in your bank account. So in a way, we need to kind of like simplify these processes, and also introduce the non-crypto literate users to be able to access this remittance, cross-border transaction, and other features of stablecoins.
Right. Okay. So right now, Rupiah Token (IDRT) is actually a one-to-one collateralization, and the equivalent of fiat money is actually stored in a bank. Is there any works to actually make it decentralized in the way of like DAI, whereby you collateralize other digital assets to create IDRT?
Correct. Yeah. So as a company that is currently work within the regulatory of Indonesian government, so IDRT is actually classified as crypto-backed asset. So we are actually backed by real asset, which is the fiat itself. So in a way, we are kind of like a non-algorithmic stablecoin right now, unlike DAI. So right now, our focus is to ensure this one-to-one collateralization towards fiat rupiah itself. But in the future, if it's kind of like the thing that we see a good fit with our company and also our user demands, it's something that is actually possible for us to tap into.
Okay, all right, okay. So we have 10 minutes more. So I'd like to forward a question to each of you, which is, what do you think is the biggest challenge for DeFi, and how is your company addressing that? Yeah. So any one of you.
I'm happy to start. To me, there are two challenges to DeFi, and I think they're related. The first is trust, which is kind of weird considering the fact that we're talking about a trustless system. But you know, because the space isn't regulated, we have a lot of shenanigans. In other words, odd behavior, and some of which isn't terribly. It's not illegal in a lot of cases. It's simply unethical, and that causes trust problems. So a lot of money pours into DeFi. People get very excited, and then bad things happen. So that sort of taints the space, and I think that's definitely a problem. And the other is, you know, how are we going to get consumers into the space? Right now, so much of DeFi is set up to address problems that traders and speculators have, right? So we need to move beyond that, and you know, obviously from our perspective, having a credit system will allow us to build products that will be more friendly to the average consumer. Of course, the average consumer will come in when there are products that appeal to them and when they feel like they can trust the system. So I think, you know, as we solve those, and I do believe we're moving in the right direction. You know, there's just no way we can have this level of disruption without some bad things happening. And of course, the press loves to emphasize the bad things, but there are so many incredibly great innovations going on in DeFi. But I think that will become obvious in retrospect. People will write books, and then everybody will understand what it is that we're going through now.
Yeah, fully agree. Yes.
On our side, I think right now the main bottleneck is the scalability. So right now, most of DeFi is on Ethereum, and as it has been pointed out by my co-panelist, the Ethereum network is congested, so it's working at capacity since quite a few months now, and it's quite expensive to do interaction on the Ethereum network. And basically, what is a fact as of today is that if you don't have a significant portfolio, well, not huge numbers, but quite a number portfolio, DeFi is not that accessible, because the passive income you will get as a lender on a DeFi protocol or inside protocols might take weeks or months in order to pay back the transaction fee you paid to get in and to get out of the system. And basically the scalability is the main bottleneck right now to mass adoption, because we are not building the decentralized finance just for the biggest portfolio. It doesn't make sense. You want to build a permissionless finance, a finance for everyone, a finance without middlemen, a finance without commission, where you are the owner of your own money. That's the goal that we are all focus on as an ecosystem. And if that's only reserved to people with like $5,000 minimum, I don't sign for this. That's not why I'm here. And we are all here. And basically, there's two solutions to that. The short-term solution is the gas optimization to have less transaction fee for the same action. And basically, with Aave protocol version 2, the Aave core developer achieved 40 to 70% reduction of gas utilization for most action. So that's quite a reduction, but that's not good enough. I think most of the DeFi user in 2021 will never use the Ethereum layer 1. They're basically going to convert seamlessly, maybe with Rupiah, directly their fiat into ERC20 tokens or other kinds of asset tokens on a layer 2, do all their transaction on layer 2, go back into fiat from the layer 2, and will never use the settlement layer. And basically, if you achieve this kind of seamless finance, so scalability and ease of transaction, you can open the gate of what is right now something that is used between 50K to 300K person in the world, to something that is used by tens of millions of person in the world.
Okay. So basically a challenge to Ethereum blockchain as well. Yes.
Yes, and the layer 2 on top of the Ethereum blockchain. I think the current Ethereum blockchain that we are all using is not made to pay for coffee or to pay for pizza. I think we should do that on the layer 2. And basically that's what happened when a blockchain has success. And we have a lot of things to learn from the Bitcoin ecosystem. The Bitcoin ecosystem and the Bitcoin blockchain had exactly the same issue a few years ago. And the answer to that was the Lightning Network, the liquid layer sidechain. And basically saying, if you want to buy a coffee, the answer is not bigger block. The answer is not less decentralization. The answer is to have a specific layer for a specific use case. And that's basically what will happen on Ethereum as well.
Interesting, interesting. What about you, Sabrina? What's your thoughts?
Yep, I would have to agree with Mark as well. Currently, we see the limitation in the Ethereum blockchain with the high gas fee and network congestion as well. And it's kind of like hindering us to reap the maximum potential of DeFi. That's one thing. And another thing is that the education content itself and how we present the DeFi to for mass retail adoption. I mean, right now, even for the existing crypto traders as well, DeFi is still relatively complex. And even for the retail investor right now, it's quite hard for them to understand what is Bitcoin and how do they trade Bitcoin, Ethereum, and so forth. So in order to kind of like be able to target these retail investors, which is probably going to bring a lot of liquidity pool to the DeFi protocol itself, is that we need to be able to give them the best UI and also UX, so they don't need to kind of like know this is based on blockchain and what is blockchain, everything and how it works, but on how they can actually use it on a daily basis. Like how can they, for example, borrow money from the global liquidity pool like Aave, and how can they even deposit money and stake money and other similar things, which is in general the user journey itself.
All right. So like make it easier. Like it should be a day-to-day application, not just for like Paul said, traders, you know, trash guys, but rather regular people.
Correct. Yep. And also probably to add that up, the regulatory umbrella itself. I mean, we're residing in Indonesia. We're working under the government of Indonesia, the Bapepti, because in Indonesia we are regulated by Ministry of Trade. So in order to be able to scale it up to mass market, we need to understand what are the legal boundaries here for DeFi and how we can implement that for mass adoption itself. Like Paul said, yeah, this is not illegal, but this is something new that we, the private initiators of this blockchain sector, need to work together with the regulators.
Okay, thank you. There's a question actually for PundiX, my company, so I'll also try to answer. So the question from the public was that, will PundiX get into DeFi? So we are actually aggressively researching on DeFi, and I think we also received some very interesting ideas from the panelists. So I think for the person that asked the question, please stay tuned to what PundiX might announce, so in the short coming future. So once again, I would like to thank Sabrina, Mark, and also Paul for this great session. And also, most importantly, I'd like to thank Indonesian Blockchain Association for organizing the Indonesian Blockchain Conference. Thank you, guys.
Thank you for having us.
Thank you very much.
Pleasure to be here.
All right, bye-bye.
Bye.